Okay, welcome all of you all for the this is the SL3, the December the 2021 paper discussion, which is my main focus. It's an exam paper discussion, yes, but the main focus is your what? It's a July 2022 corporate taxation paper. Then with that intention as a the prerequisite for your the July 2022 SL3, which is your corporate taxation paper, we need to start the recent paper discussion, which is December 2021 paper, as a help, as a guidance, as to communicate some changes to you all. Then with all these intention, let me start the December 2021 SL3 corporate taxation, the paper discussion, with the main intention of this is a clear guideline and clear help for you for your upcoming examination. Okay, now come to the paper discussion, the December 2021 paper. Now for this discussion, initially before coming to the questions, I need to come for one of the important thing as usual, which is the examiner's comments. Then we need to look at what are the things, what are the good and what are the bad things the students have been done at the this exam paper. Again, this is the help for y'all to take the advantage if there are any errors made, to not to do those things, and if any good things, to continue those. Okay, then before anything, I need to come to the examiner's comments on this paper. Okay, let me come to that part. Then here we will come to this in here the examiner's comments, which is on the corporate taxation December 2021. Now come to here, I'm taking the general comments, individual questions wise I'm not going, but I need to go for the general comments, which will be a value addition to you all. Come to here, the general comment, the general performance of the candidates in this examination was satisfactory comparable to previous examinations. Then well done. Okay, majority of candidates were successful in methodically approaching questions and thereby successfully produced reasonably for the focused relevant answers addressing the principles and core components of each requirement. Then this standard you should maintain. What is that? You should address to the requirement by your answer. Then that is the key thing you should have to do. And the second, we would like to remind candidates that the students should be able to compile comprehensive tax computation. Now, you all know your section 2, question 3. For the 30 marks, for the resident company taxation, it's totally a comprehensive tax computation. Then you should have that ability to do that. And again, not only that resident company taxation, but also even taken the non-resident taxation, even taken the value added tax, even taken the option evaluation with the doing of the questions. Then all these areas, then you need to do that comprehensive tax computation with the taking into the advantage of the relevant provisions of the Inland Revenue Act. Okay, also they should be able to compile tax planning, for form decision making on minimizing tax expenses and mitigating risk, and effective communication with tax authorities, clients and the management. You know what's the position in your tax paper is a tax consultant. Then it is on the tax planning, the resident company taxation, the business decision making, non-resident and international taxation, and the value added tax, and the required, the contemporary issues in taxation. Then therefore, in all these things, as an as a nutshell, you should have this ability when you are answering the paper. These should be embedded, included in your paper, okay, the answer. Then therefore, answers comprising of mere technical knowledge will not score marks in this level. Clearly identify them. You should apply the particular technical or a theory, that provision, you should need to apply it to the given scenario, and based on the action verb, you have to write a proper answer. Then it is by even the open book referential, you can bring your act. However, you should need to apply that particular the technical provision in the IRA, or rather value added tax. You need to apply that to the given scenario. How to apply for that action verb, you need to write the answer, okay. Then this is, don't write mere that even open book referential. Don't think, okay, by looking at that I can write no marks awarded. These are the key things before starting the paper I need to highlight. And students should learn to read widely in order to broaden their horizon and be able to write with essay. Then when a student fails to read broadly, it affects their ability to advance good arguments in their presentation. Lamai, you should read the question very well. It's not like that. That's why the additional 15 minutes the reading time has given. Then when doing the first question, you will understand how you should effectively read the question. Then if not, how many things you are missing. Then your examination, you should focus in your paper. You cannot think anything other than the paper, the questions. Then in that, you should need to read effectively to write the answer. That reading mechanism, the broad reading mechanism, it's one of the effective thing for you to write a good answer. That's the next one. And it is to be noted that students should address the structure of the paper, since 3 questions are based on scenarios, the scenario based questions. Then you should need to answer for that particular scenarios. Therefore, the answer should be applied to the content of those patriarchal scenarios. It's very clearly given. The application based on the action verbs within 3 hours and 15 minutes, you need to do that. Then, rather than being vague and general, you cannot write a general answer. No, maybe no marks, maybe the stipulated marks are reserved to you all. Furthermore, candidates should be able to display their willingness to address the action verb. This is, I am highlighting this. You should write to the action verb. Write to the action verb. Yanne koheda mallepol, no answers. Then you should have a you should address the action verb, knowing the requirement asked by that particular marks within the time management. The expected learning outcomes, knowledge process, knowledge dimension, etc. in respect of the producing meaningful answers. You should know your syllabus, and Namai, don't go with the selective learning. I am extremely not like for that process. Then you should, there is 100% of the syllabus. For exam, you should learn that 100% of the syllabus. Then we don't know where it will be tested. Then therefore, don't go for the selective learning. Know your syllabus, know your learning outcomes, and within that, know your action verbs. Then practice the question. The writing skill is essential. The essay type answer you should need to write. Then with all these things, being a smart student at that 3 hours and 15 minutes, you all can pass this paper with all the knowledge and practice which this period you can take from your hard working and commitment, you can do this. Okay, then this is on the question wise I am not going, because I need to come for the general comments, which as the small eye opener for you before starting the paper. Now let me come to the paper. Then in the paper lamai, before anything again I need to come for this part. Why this part is important? It's very specifically, the reason is you should know, my main focus is here, you should know what are the open book referential materials. Then most of the students, they still don't know for SL3, which is corporate taxation paper, what are the relevant open book referential materials. Then which is unfortunate. Then therefore let me come with the previous paper with the guidelines and to see what are the open book referential materials which you should need to bring for your examination. Come to here. You know this all, there are 3 questions in the paper, the 2 sections in the paper, and in that the time is it is the compulsory to answer, no selections. Then it's a 3 hours and 15 minutes, you know these things. And here I am looking for item 6, which is the examination will be conducted as an open book examination and only the following publications will be permitted to be used at the examination hall. What are those? First one is your main thing is the Inland Revenue Act number 24 of 2017, which is the main enactment. And after that, and subsequent amendments, the amendment is the Act number 10 of 2021. For your examination, it's a year of assessment is the 21-22, it has published. Then therefore, with that, which is in the open book referential materials, in that the Inland Revenue main enactment, which is Act number 24 of 2017, and the amended Act number the 10 of 2021. Okay, these are the 2 things with the amendments and the main enactment. And the next one, the Value Added Tax Act number 14 of 2002 and the subsequent amendments. For this, the subsequent amendments, if I have mentioned the latest amendment, it's the Act number 9 of 2021. It is the latest amendment. Then up to that, you should need to know the things. Okay. Then in the value added tax, there are from 2002 to up to now, there are many amendments with all incorporating all, plus this the latest amendment which is relevant to your examination, which is the Act number the 9 of 2021. Then it is the latest amended act relevant to your examination. And relevant gazette notification, this is very important. At the end of the session, I will take the list of the gazette notification, but at the end of the paper discussion, I will take those. Then you should need to buy all these things prior to your examination. Okay, then Act, it's a publication, government publications you can buy, the gazette notifications, the relevant, all the documents you should, gazette notification from CA Sri Lanka you can buy, then purchase these things. Then therefore, please refer to these things and please have these things before your examination. Okay, then these are the general comments which the as the examination guideline but here I really need to come for open book referential material, in that IRA and subsequent amendments explain, VAT explain, and the gazette notifications I will come at the end of the session and I will show you what are the gazette notification relevant. Okay, now with all I need to come for the discussion, which is the question 1 discussion. Question 1 discussion, which is it's a 15 marks for the non-resident and international taxation, and the rest of the 10 marks, it's a option evaluation and calculation with reference to the individual taxation. Some extent it has tested. Okay, now come to this. Before anything, I need to come for the requirements. This is for starting point. I need to come for the requirements. In that, what's the requirement? When it comes to the question 1 for 6 marks, it is asking required analyze the permanent establishment PE exposure for the span to Germany in Sri Lanka under the structure followed by the Palmyra Germany. In that, including the possibility of the availing any exclusions. Now you can see it's the talking about the you need to look at the PE exposure, and as well as you need to go for the exclusions provided in the double tax agreement between Sri Lanka and Germany. Now what is the double taxation agreement? It is the Sri Lanka and Germany. Then in that your answer, it's the how to answer, it has given support your answer sheet in statutory provisions of the Inland Revenue Act number 24 of 2017 as amended, and the double tax agreement between Sri Lanka and Germany. Then it is for the 6 marks. Now if it is for 6 marks, Lamai, it's a 1.8 minutes, then it's at the per mark, then 10.8 minutes you should need to spend. Now come to this one. Come to this, I need to come for here, which is okay, this is the section 1, question 1. In that, in the part A, non-resident and international taxation, the question has 2 parts. In that, the part A is non-resident and international taxation. What is the tested DTA? It's a Sri Lanka and Germany, again with the provisions of the IRA, with the provisions of the Inland Revenue Act. Clear? Then here, what's the part 1? As we have looked into the paper, the part 1 is the analyze the permanent establishment, which is a PE exposure. How to analyze? Guidelines given in the requirement, which is as per the provisions of the Inland Revenue Act as well as the double taxation treaty. Okay. The part 2, what's the action verb? The action verb is discuss. Discuss about what? Discuss about the suggestions made by finance manager on mitigation of PE exposure. When reading the question, you will understand there are some suggestions made by the finance manager. Then the question is if the company applied the suggestions, then can we mitigate the PE exposure? That's the second thing. And the third requirement, compute or a computation of income tax liability of a non-resident company, including remittance tax. Now all of you know, if there is a non-resident company, then there should be a remittance tax calculation. Then don't forget these basic things. Now this is for the total 15 marks. Total 15 marks. These are the 3 requirements. These are the 3 requirements. Then therefore we need to look at, starting from this first one, how are we going to analyze the scenario. Okay. Now come to this, which is your paper. In here, let me come to the question. Let me come to the question. Let me analyze the question. After that, I need to come for a special discussion. This is the question 1. Then Okay, since you all have the paper, for the analysis of the question part, lamai, I'm taking the hard copy of the paper, and please look at your paper and we will come to the analysis part because I need to analyze the information given in the question. That's the first thing. Come to here, which is Palmyra Property Developers GmbH, which is Palmyra, Germany, is a company incorporated in Germany. Now, let me come to this one, which is the first thing is we need to come to the analysis, the company what in the question. Okay, the first thing is the Palmyra Property Developers. It is a German company incorporated in Germany. Now, come to here, which is the I will take is a PPD, then we have PPD, then in the PPD this is a German company. This is a German company and it has given it is incorporated in Germany. Now, lamai, this is the company which is incorporated in Germany. By looking at that, then you can understand, since it is incorporated in Germany, what is this company? This is a non-resident. This is non-resident company or a non-resident person. This is the first thing. It has given very clearly, this is what it is incorporated in Germany. Is it incorporated in Sri Lanka? No. Now, this is the first thing. And secondly, it's a company incorporated in Germany that intends to develop a condominium property. Now, what is the principal business activity of this organization? The principal business activity of PPD Germany, it is the develop a condominium property, the develop of the condominium properties. Okay, that is the nature of the business. Then in Sri Lanka, what they are going to do in Sri Lanka, they develop condominium property. Now, for the above purpose, very, very important. Now, you can see their principal business activity is the development of condominium property. To serve this purpose, for serve above purpose, what they have done, for the above purpose, Palmyra Germany incorporated a fully owned subsidiary in Sri Lanka, namely Palmyra Lanka Private Limited PL. Now, let me take this. This is a company incorporated in Germany. Under this, as the fully owned subsidiary, we have PL, the Palmyra Lanka. Lamai, what is this company? This is incorporated in Sri Lanka. This is incorporated in Sri Lanka. Since this is incorporated in Sri Lanka, what is this? This is a resident company. This is resident company. You should need to understand these things. Then after that, now para by para I will come. Palmyra Lanka commenced the development activities of the condominium property in January 2021. Now, on behalf of the PPD Germany, the Palmyra Lanka has started their business activities of the development of condominium properties, which is on the January from the January 2021. The following structure. Now, can you remember, Lamai? Can you remember in here the requirement? If I have again came to the requirement in here, it has given analyze the permanent establishment exposure for the Spandu Germany in Sri Lanka. It has given, Lamai, what it has given under the structure followed by the Palmyra Germany. Now you need to know there is a structure. That structure in the paper, what is the structure given? You need to analyze the structure. Then first thing, read the requirement, and with that intention you need to come for the question. Very in the concentrative way you have to read the question. Now come to here, which is Then in here, the structure, we need to look at structure. Let me analyze the structure. I will come to here again, but let me analyze the structure here. What is the structure? Pamela Lanka commenced the development activities of the condominium property in January 2021. The following structure was adopted relating to the design and project management services of the project. Now structure, in the structure we have the two things. What are those two things? The first one is the designing part, and the second one is the designing and project management services. Project management services. This is the structure. Under these two, we will see what has happened. Okay, Pamela Lanka engaged Spandu GmbH. This is our company. Our company is not PPD Germany. Don't misunderstand. Now in the requirement it asking the SG, which is Spandu Germany. That's our company in the requirement. Now come to here. Pamela Lanka engaged Spandu Germany, a company incorporated in Germany, which is a fully owned subsidiary of Pamela Germany for the design and project management services. Now third company coming into effect. What is the third company? Let me come to here. The third company is our concerned company. I will take it as SG. SG, it is a wholly owned subsidiary, again the 100% owned subsidiary of PPD Germany. Now why they have involved in this structure? Because of they are doing the designing and which is the designing and the project management services for this condominium, designing and project management services for this, the development of condominium property on behalf of the PPD Germany. This is the link. For what company? PE exposure you have to analyze, Lamai. The company is this SG, which is doing the services to whom, which is the Pamela Lanka, which is Sri Lankan company. Understood? Clear? That is from I have extracted all these things from the third paragraph in the question. Now come to the fourth paragraph, which is the design service were provided by Spandu Germany directly from abroad. Very, very important. Very, very important. Now designing. Now I am analyzing these two. In here, the structure. Now let me analyze this. In the designing, service were provided by Spandu Germany directly from abroad. Now there is one, the providing of designing I am taking is directly from abroad. Directly from abroad. Done. Then the next one, Spandu Germany issued its invoices directly to Pamela Lanka for the designing services based on each milestone of completion. Now, let me come to these services with the angle of our concerned company, which is SG. I am analyzing this with reference to SG. Okay. Then, in here, the designing direct part they are doing, and they are supplying that services to Pamela Lanka. SG supplying services to Pamela Lanka. Then from the side of SG Lamai, this designing, it is the income. This is income, and for Pamela Lanka, it is the cost. But this income is Question: is this income generated in Sri Lanka? No, this is directly from abroad. When we are looking for the SG, this is SG's foreign income, not the income arising in or derived from Sri Lanka. Clear? That's the first thing. Now, it's from the fourth paragraph. Let me come to the fifth paragraph. In relation to the project management services, SPANDU Germany engaged the services of independent specialized consultants. Now, what is this? It is on the project management services. The second is in the structure, second part. In that it has given the SPANDU Germany engaged in the services of independent specialized consultants. How they will perform that? Such as artists, lighting designers, etc. So now look at who provided their services directly to Pamara Lanka and invoiced Pamara Lanka directly. Now same thing. Again, this project management part, in that there is a so-called service which is the independent consultancy services. Independent consultancy services. In the independent consultancy services, again I am adding this is done directly from abroad. Directly from abroad. This is not done or income arising in or derived from Sri Lanka. With respect to SG, Lamai, what is this? This is a foreign source or a foreign income, not the income arising in or derived from Sri Lanka. Clear? Then this is that again, this is the income to, in the side of the SG, this is income, and it is not the income arising in or derived from Sri Lanka. Done. The 2 points, all these things are very important for you to look at the PE exposure and doing the calculations. Now I am coming to the fourth bullet. SPANDU Germany charge Pamara Lanka coordination fee of 10%. Very, very important. Of the value of invoices raised by from whom, Lamai? Independent specialized consultants. Let me come to here. Let me come to here with reference to this, the project management services. With reference to the project management services, now this part, there is a second income category, a coordination fee. It's given 10%. Coordination fees. In the coordination fees, Lamai, it's a 10% on this, the project management services under that with reference to independent specialized consultants. Now, this is one of the key income. Again, this coordination fee with reference to SG, this is income. All these are expense to the PL. Okay, Pamara Lanka. Now come to next one. The 1, 2, 3, 4, fifth bullet. SPANDU Germany registered a representative office. Now this is the formation of the SG, which is talking about, the formation of the SG. There is a representative office they have registered, which is RO they have registered. For what? Come to here. SPANDU Germany registered a representative office in Sri Lanka when, Lamai? 1st November 2020. This registration has done the 1st 11/2020. To perform what kind of activities? The only to engage in the collection and supply of information. In your paper, if I have come into here, in your paper, you should, here in the question, you should need to very clearly identify the reason. It is Spandu Germany registered a representative office in Sri Lanka on 1st November 2020 only to engage in what, Lamai? Collection and supply of information. 2, on behalf of the PPD Germany, which is head office, carry out carry out quality control activities and coordinate with the independent DARA in the independent specialized consultants. Then employees of Spandu Germany visited Sri Lanka to carry out these functions. Now, there is a place where the non-resident person performing activities in Sri Lanka in a way of RO, the representative office, the representative in what? The head office, PPD. Very, very important. What is the purpose? Only to engage in collection and supply of information and looking for a quality control. Clear? Now I'm again coming to here. Then for that, it's a last bullet, sorry, before the last, then since the supply of information and quality control activities carried out in Sri Lanka are connected with design services, very important. That is the next thing. That is the next thing. The designing part, how the invoicing has made, in that since the supply of information and quality control, what they are doing in the under the representative office, it's linked to, it's a very clearly given, it's carried out in Sri Lanka, are connected to design service, which is carried out in Germany. Then invoicing part, how it's pricing, the fee for such services too were included in the design-in fee invoice. Now, there is a design-in fee invoice. For this one, design-in, the directly is done from the abroad. From this design-in fee, including this invoice, there is a price charge or a fees charge for what? For non-resident person, which is the income arising or derived from Sri Lanka. Arising in or derived from Sri Lanka. What is that part? It's a 12%. Now, don't forget there is a coordination fee of 10%. Other than that, there is a, in the design-in fee invoice, there is a 12% with reference to the collecting of information and the quality control through that RO. Then there is a 12% margin. It's applicable to, it's very clearly given, control activities carried out in Sri Lanka. Then issuing separate invoice for the same fee for these function accounts for 12% on the total design fee. From this total design fee, the margin or a relevant portion for this, the quality control and the information collection is a 12%. Done. Now the next one, which I need to come, the compensation schedule for the design-in and project management services is given below. Pamela Lanka settled all the invoices raised by the Spandu Germany and the independent specialized consultants within 30 days from the date of the invoice. Again, let me come to the paper. Now here, what is your year of assessment? I am taking the same year of assessment, that's mean 2021, since there are no changes, and again with the information I couldn't come to the year of assessment 21-22, then I am coming to 2021 in the same manner. Any change I will explain. Then in here it is the how to perform or dates of perform of the design-in fees and the payment on that, and the project management fee under that structure, the payment and the dates given. Now come to here, what's your year of assessment, Lamai? Year of assessment is a 2021. Here the year of assessment is 2021. In that, the 2021 year of assessment, what are the relevant months? What are the relevant months? November, December, January, February, March. Now you need to take the 5 months relevant for our discussion. The 5 months relevant for our discussion. When you are reading the question, you should need to highlight all of these things. Okay? Now come to here, and again after that, the salary cost of the employees who visited Sri Lanka to attend to the other functions undertaken in Sri Lanka was borne in SG instead of the representative office in Sri Lanka, and was remitted to the employees the respective bank accounts in Germany. The staff cost therein, the US dollars staff cost, it is US dollars 4,000. You can look at it's per month, that's why that number of months are important. Again further, the representative office incurred administrative expenses US dollars 2,000 again per month. For what this staff cost? In there are consultants, they are doing their activities, then for that, and for the representative office, administrative expenses per month, everything has given. Now what are those things? These are costs to the SG in Sri Lanka, cost to the SG in Sri Lanka. And again, now I am not coming to this part, I will come to that part with reference to the, now discuss the finance manager's intention. Okay, now all the question which we have analyzed. Now let me come to the requirement again. Let me come to the requirement again, which is, in the requirement, analyze the permanent establishment PE exposure for Spandu Germany in Sri Lanka under the structure followed by Pamara Germany. Now you all know it is the designing and the consultation, including the possibility of availing the exclusions provided in the double tax agreement between Sri Lanka and Germany, and support to answer seat in statutory provisions of the Inland Revenue Act and the double taxation treaty between the Sri Lanka and Germany. How are you going to analyze the PE exposure? Now you know the information of the question, you know that particular structure, you know the pricing, you know the income, you know the cost. But since you have all the information relevant to this non-resident person, Lamai, I need to come for the structure of the answer. But first, let me come to the analysis of how to answer the non-resident taxation and international taxation question. Okay, let me come to here, which is other than this, let me come to here, which is the structure of the answer in under the non-resident and international taxation. Okay, the first thing is, when it comes to non-resident and international taxation, which goes to your 15% of the syllabus. In here, first thing, Lamai, you need to understand, first one is the determining of the residential status. Determining of the residential status of a person. Now with reference to this, you need to look at the section 69 subsection 1 and section 69 subsection 4. Section 69 subsection 1 is for the determining of the residential status of the individual. The 69.4 is for the determining of the residential status of the company. Clear? This is the first thing. In our question, now I am applying these things. In our question, already we have determined. Our concern is on the SG. We have determined, okay, SG is a non-resident person because it has incorporated in the Germany. Then what we are going to do is we are applying section 49. Then being that it's a non-resident company, done. Then the next one, after determining the residential status of a person, after determining it's a non-resident person, you need to look at lamai, how to tax. How to tax, and in that what to tax. What are we going to tax? Very simple manner. What are we going to tax on behalf of this non-resident person? Again, we need to look at the source of income where it has mentioned in the assessable income. In the assessable income, which is in the section 4 paragraph B, which it has given assessable income of a non-resident person. It should be taxed on the source of payment, which is the income arising in or derived from Sri Lanka. Income arising in or derived from Sri Lanka. Clear? This is a second step. Now you have recognized there is a non-resident person. In next, you should need to understand on behalf of the non-resident person what you should need to tax. Then you need to identify the sources of income. When analyzing the sources of income, you need to know what are the income in the assessable income. Section 4 subparagraph B, for non-resident person, we should need to look at the source of payment. For resident person, we need to look at the world income, which is wherever arise. But for the non-resident person, we should need to look at what is the income arising in or derived in Sri Lanka, source of payment. Done. Now, when it comes to this income, I'm going this way. Then when it comes to the income arising in or derived from Sri Lanka, this is the source of payment. Source of payment in the domestic law or the provisions of the Inland Revenue Act, you need to look at for section 73, which is talking about the sources of payment. Then in the domestic law, let me come to here, I'm all explaining based on the domestic law provision based on the Inland Revenue Act. Then here in the section 73, you have identified these are the source of payment: employment, dividend, interest, rent, royalty, the business income, maybe that particular transmitting of messengers and the service fee, technical service fee, anything. Then you have identified this. After identifying what our main concern, how to tax. In here, when payment of the tax, there are two things. You need to look at the withholding tax provision, you need to look at WST, withholding tax provisions applicable to non-resident person, as well as the income tax rates. Income tax rates. For income tax rates, what we are looking for, let me come to income tax. We are computing taxable income or tax on taxable income with reference to what, Lamai? We are computing that with reference to if there is a PE. In our act, it's a SLPE. You should know the definition of the SLPE. What is the definition of the SLPE under section 195? It has very clearly given there should be a fixed place or a business connection, irrespective of the number of days. Then, for compute the income tax, that means there should be PE for this PE, for this PE exposure. In here, we should need to compute the profit attributable to PE. Profit attributable to PE. Clear? Then when computing the profit attributable to PE, what you are going to compute? The business income or maybe investment income. like we have done in the resident company taxation, the knowledge of that particular adjustment, allowable expenses, disallowable expenses, specific deductions. That same knowledge applicable for here. Clear? Then please keep in mind to compute the business income or profit on behalf of a non-resident person. There should be permanent establishment. Then you need to identify income attributable to that permanent establishment and the expenses arising or incurred on that permanent establishment, and thereby you need to compute the profit or whatever loss, and you need to convert it to the business income. This is something I need to very importantly communicate to you. Okay, then this is on the PE, it's a fixed place or a business connection. Business connection may be arise based on the dependent agent principles. There are case laws, please look at. Okay, now done. Now for this we need to compute the taxable income and tax on taxable income. In the income tax rates, I'm coming to here. In the income tax rates, there are income tax rates in the maybe normal tax rate of the 24%. In that maybe industry specified rate when applicable it's a 14%. Small and medium enterprise rate you cannot apply. Maybe again it's 18%, plus you have the remittance tax under section 69 at the rate of 14%. That's all on the income tax. Then comes to withholding taxes. When it comes to withholding taxes, you should need to look at the one is section 83A, which is on the APIT deduction on the compulsory basis for the employment income of the non-resident individual. Then you need to look at the next one, which is the section 84, which is talking about the investment return, one part which is the rewards, betting, gaming, and the gems sold at auction at 2.5%. Then this is two kind of the investment returns, and again very importantly section 85(1)(a), which is talking about the interest, dividend, royalty, all these things which if the non-resident person has earned or derived that income in Sri Lanka, what is the applicable withholding tax rate, and for all these things you need to link to section 88. Section 88, which is in the sub which applicable from the 1st January 2020, which is the to determine final withholding payment or not. This process you should know very clearly. For this withholding tax as well as the income tax rates, the first schedule is critical for you all, which mention in the tax rates, and for withholding tax rates you should need to refer the para 10 of the Inland Revenue Act, and for the first schedule the relevant tax rates with reference to non-resident person. Clear? This is on the domestic law. I have explained the tax requirement. Now after that, now this is on domestic law now, then we need to look at what's the provision applicable and what is the provision applicable under the international law. The international taxation, you need to look at under international taxation how it link with the domestic law. There is a section 75 subsection 2 provision. If now this part, this domestic law requirement is applicable if there is no double taxation treaty. If there is a DTA, like in our question, you need to apply what provisions in the DTA. Who has mentioned to do so? It's in the Inland Revenue Act, the section 75 subsection 2. Section 75 subsection 2, it has very clearly given if there are double taxation treaty between Sri Lanka and a concerned country. In that sense, you need to follow the prevails, what's the prevailing law is a double taxation treaty. This is the section on international taxation, on the double taxation agreement and the mutual administrative agreements. Then in that very clearly given the prevailing of the DTA. Then therefore, if there is a DTA, Lama, you should need to apply the provisions of DTA. Provisions of DTA, like in our question, there is a DTA between Sri Lanka and Germany. Now, what you should need to apply, how you should conclude your answer, Lamai, from the provision of DTA. That's why this structure I have explained to you. And again, for this, all these domestic and international, which the double taxation treaty and all, I need to add the case law provisions you should know. Case law provisions on the dependent agent and the independent agent, which is Anglo-Persian Oil Company and the CIR and the Chiviers and Sons versus CIR. These two case laws, wherever it's applicable, you have to apply. Okay. Now the key things, let me summarize with reference to this question. There should be permanent establishment or a PE exposure to compute a business income. Now that's why in the question it's asking whether there is a PE exposure or not, based on the particular provisions of the double taxation treaty, and they're asking on the domestic law provisions. I think this is clear. Lama, if you all studying the non-resident and international taxation, then at least you should know these areas. At least you should know these areas before your examination. This is a summary, this is a mind map for you all to cover all the things. Done. Now, with this main intention, I need to come for the answer of the question to analyze the PE exposure. To analyze the PE exposure, now come to here. Okay, then this is analysis of the question 1, which is the question 1A. In the question 1A, the first discussion, analysis of the question 1, which is A Roman 1, action verb is analyzed, which is a tier 4. I'm looking for action verb, it's really important, and examine in detail in order to determine, now determine the solutions or outcome. You should need to provide the conclusion. In the here, you should need to provide the conclusion, it's something essential. And coverage of the answer. First, let me come to here. How non-resident person will be taxed in Sri Lanka? That's the first thing. And identify what is the source of assessable income. I have explained it. And apply provisions of DTA in our question. It's the Sri Lanka and Germany. Why DTA provision is applicable? It's a section 75 subsection 2. It's very clearly given if there is a DTA, you should go for DTA. And identify how business income has generated in the PE with the PE exposure, and while analyzing the inclusions of the PE and exclusions, this is the requirement of the question. You need to look at what are the inclusions of the PE and what are the exclusions of the PE as per the provisions of DTA. Provide conclusion by applying the provision of DTA to given scenario. How to conclude? This is very important. How to conclude? If there is a PE, yes, you should need to tell the reasons. If there is not a PE, again you should need to tell the reason. This is how conclusion to analyze whether there is a PE exposure or not. Okay. Now, let me come to the analysis of the answer with the double taxation treaty. Okay. Now, okay. Okay. Now, again, I need to come for the question, which is the question in here, it is all the information we have analyzed. Now, with this, I need to come for the annexures of the double taxation treaty. In your paper, the relevant annexures of the double taxation treaty has given. In that, I need to come for the treaty and I will come to the answer format. Okay? In the last part of the paper, under the annexures, the Sri Lanka and Germany, the double taxation treaty particular provisions are there. Come to here. Annexure 1. This is extract of the agreements for avoidance of double taxation, which is in with the Sri Lanka and the Federation of the Republic of Germany. Now, permanent establishment. Now, first we need to look at the SG has created the PE in Sri Lanka. Now, with reference to first one, with reference to the first two, which is the design in income, which is directly performed in Germany. No. Secondly, which is on the second one, which is on the project management services and specialized consultant, directly done in abroad. No, there is no any PE exposure. But now we need to look at what is the permanent establishment definition. Now there is the representative office. For through that, we need to look at is it generate a PE? Is it not generate a PE? That's the thing we need to analyze with the double taxation treaty. Come to here. For the purpose of this convention, the term permanent establishment means a fixed place of business. Lamai, do we have a fixed place of business? Now, these questions you need to ask. Do we have a fixed place of business? Do we have fixed place of business? For the information what we have accordingly, yes. What we have, the RO, representative office. Now, in which the business of the enterprise wholly or partly carried out. It's not wholly but partly it is carrying out. Clear? Then, the term permanent establishment shall include especially. Now, the inclusions, the requirement is asking these things. You need to argue with the inclusions at the if there are exemptions or exclusions relevant to PE. Then again here, the term permanent establishment shall include especially a place of management, branch and office, factory, workshop, mine, a mine, oil or gas well, the quarry or other place of extraction of natural resources. Now, these things are there. And again, the term permanent establishment, I need to come for here, the term permanent establishment shall not deem to include. Now here, it's a shall not deem to include. What are those? The use of facility solely for the purpose of storage, display or delivery of goods or merchandise belongs to enterprise. Are we doing something like this? No. The maintenance of the stock of goods or merchandise belongs to the enterprise solely for the purpose of storage, display or delivery. SG is doing something like this? No. The maintenance of stock of goods or merchandise belonging to enterprise solely for the purpose of processing any other enterprise? No. SG is not doing these three. The maintenance of fixed place of business solely for the purpose of purchasing goods or merchandise or for collecting information for the enterprise. Lamai, this is the things you should need to by reading. That's why I have mentioned the reading of the question is very important. Now, in here, the effective reading, now you can see here the D is applicable to us. What we are doing, SG, we are collecting information and quality control activities with reference to the enterprise mean the PPD Germany, we are doing that. We are wholly owned subsidiary of PPD. Now there is exclusion. Now there is exclusion. We will look at how the exclusion applicable to the given scenario. මේක මෙහෙම තිබ්බයි කියලා අපිට ඒක කියන්න බෑ. We need to apply it to the given scenario. Now, the maintenance of fixed place of business solely for the purpose of advertising for the supply of information for scientific researchers or similar activities. No, we are not doing anything like this. Now from this, my main focus goes to D. For the exclusions. Now in the inclusions, we know there is a fixed place should be, and in the exclusions, for if anything, only for the collecting of information. Then if there is a fixed place, then it is not a PE. Okay. Now again come to here, which is on the independent and dependent agent. It's not applicable for here, and the general commission agent. No, I'm not coming to here. Then okay, these are the things which I need to come under the exclusions, under exclusions for the PE. Now, you know what's the PE under double taxation treaty, and you know there is an exclusion. How could you write your answer? Then, in that lamai, in our question, that SG, the SG, are they doing SG? Are they only doing the quality control activities? No, Lamai. They are not only doing the quality control activities. They are not only doing the information collection. With reference to the designing and with reference to project management services, they are doing a coordination. That's why it's very important for you to read the question. They are doing a coordination of the which is coordination work, which goes to 10%. And again, with the other administrative activities with reference to this head office. It's not only doing the collection of information on behalf of the head office. Then we cannot apply that exclusion. The only thing you should need to identify when reading the question what they are doing in Sri Lanka. There is a coordination fee of 10%, which that it's not only the collection of information. They are coordinating that independent consultants with the head office, and for that as an intermediary for PL, and they are obtaining which is a 10% of the coordination fee. Clear? Then again, in the designing fee, in that, including in the designing fee, what they are performing, the administrative activities in Sri Lanka, there is a 12% on margin they are earning. Then they are not only doing the collecting of information, therefore that the exclusion, given in the double taxation treaty, you cannot apply. You cannot apply. Therefore, there is a PE exposure. There is a PE exposure for the SG because there is a fixed place. Why I am telling there is a fixed place, Lamai? Now, when it comes to the question, if you can remember in the question, it has very clearly given from the November of the 2020. They have came into Sri Lanka, they have started it. Now for all the information given, there are 9 months period, if I can see here. The 9 months period they are doing the activities, then there is a fixed place which is the RO is there, the representative office. Then for that there is a fixed place. Through that fixed place of the business, the one activity they are doing is collecting of information. It is not the only activity they are doing in Sri Lanka. Therefore, as per double taxation treaty, we cannot apply the which is that exclusion on the treaty model on behalf of the PE, since there is a fixed place. On that fixed place, there are income attributable to that fixed place, the 12% and the 10%, that the particular income, and there are expenses attributable to that PE. Then thereby, there is a PE exposure. Now, this is how you all analyze. I'm not going for the detailed answer. The suggested solution is there. Please go through. Take in a high time to explain this. Now, not only that, since there is a PE exposure, I need to come for the business income article. The business profit article. In the business profit article, I need to come how it linked to this. The business profit, the profit of an enterprise of a contracting estate shall be taxed only in that estate unless the enterprise carrying on the business in the other contracting estate through a permanent establishment. When you all doing the non-resident taxation, please remember these as a key thing. Without having a PE exposure, you shall not compute a business income on behalf of that non-resident person. Clear? Then, subject to provision of paragraph 3, where an enterprise of the contracting estate carries on business in other contracting estate through a permanent establishment situated therein, there shall be each contracting estate be attributable to permanent establishment what the profit which it might be expected to make it were a distinct and a separate enterprise. That's why for this SG, the Sri Lankan operation, we need to compute a income tax liability since there is a PE. That's why it has given engaged in the same or similar activity under the same or similar conditions and dealing wholly independent with the enterprise, which is the permanent establishment. As independent enterprise, we need to compute the income tax liability. Done. And the next thing, in the determining of the profit of the permanent establishment, there shall be allowed as the deductions expenses of the enterprise other than expenses which would not be deductible if permanent establishment were a separate enterprise, which are incurred for the purpose of the permanent establishment, including executive and general administration expenses. That's why there are administration expenses which is per month US $2,000. We can deduct it. It is including the deductibility of the expenses, the determining profit, what we have to do, it has given. Then in that you can deduct the expenses, including the general and administration expenses. That's why we are deducting this 2,000 per month, $2,000 US. Okay? Insofar as it has been customary in the contracting estate according to its law. That's why I am always telling, when you are doing the permanent establishment, that question as a separate enterprise, you should have your entire knowledge on the how to compute business income, how to compute investment income, and again if it is individual, how to compute the individual taxation with reference to non-resident person. Okay? Then that is on fourth one, and then which I need to come. Okay, then okay, these are the important things which I need to highlight in the business profit article. In the business profit article, then thereby, now you should know the link between the PE and the business income. Okay, now let me come to the answer again in the mind map manner. I am not giving the detailed answer. Please refer to the suggested solutions. The great explanation has given, but I need to again as eye opener take the mind map and coming to the question. Okay, now let me come to this, which is which is the answer format. This is answer format, not the exact answer. Now first thing, in the question, this is the question 1, part A in that sub Roman 1. In that, lamai, the first thing what you need to do, identify what is a non-resident person or who is the non-resident person. In our question, non-resident person is SG. SG is engaging in 2 activities, which is designing and the management that it is which is under the particular structure, project management with the independent consultant. Okay, this is a non-resident person. On non-resident person, now what should be taxed in the section 69 subsection 4 according to this non-resident person, and after that what should be taxed in the section 4 subsection 2, income arising in or derived from Sri Lanka. You have to write this very clearly. This is a non-resident person. Since being a non-resident person under section 4 subparagraph, sorry, it is the B, not the 2, it's a B. Then section 4 subparagraph B, the income arising in or derived from Sri Lanka, employment, investment, business and other income. It should be taxed in Sri Lanka. That's the second thing. Now the question is, can you go with the domestic law provision in here? No, lamai, for this P analysis of the P exposure. Yes, we have the Sri Lankan permanent establishment definition, but irrespective of this, in the international taxation under section 75 subsection 2, we need to apply the double taxation treaty between Sri Lanka and Germany. What are these 2 articles? The article 5 and the article 7, which is business profit and the permanent establishment definition. Now let me take in the permanent establishment definition, Lama, you have to write answer in the 2 angle in your question. What are those 2 angles? You need to prove the inclusion like I have done and the exclusion. In the inclusion there is a fixed place. You have to write this. There is a fixed place. What is a fixed place, Lama? It's RO. The representative office, you have to write this. What they are doing in the representative office, you have to write. It's all the information given in the question. And again in the exclusion, merely it's only for the information collection. But they are doing the information collection on behalf of the head office, but not that only activity, because we have analyzed, these are the key points to approach to the answer. We have analyzed, they are doing a coordination fee as well as from designing fee, there is a part. These are core things. If you have not identified these 2, the approach to the question, you cannot do. To identify this, Lamai, this is not the rocket science. I'm always telling you have to read this. Then the same thing I am doing. What I am doing, the same thing I am doing here. Then when reading the question, this all the mind mapping, all the structures I am writing, and I need to see that. And the same, especially in the non-resident taxation. Why I am doing so? To go for the approach to the answer. Okay? Then here, not only the collection of information, but also Lamai, they are doing that coordination and the designing, that 12% profit margin is there. Okay? Then here, you need to tell why inclusion, why exclusion, and you need to tell, argue 1, this is the exclusion not applicable. How to tell that coordination fee and the other thing. Then after that, you need to determine, okay, there is a PE exposure. There is a PE exposure. Therefore, you need to write, since there is a PE, the income and expenses attributable to that PE, you should need to compute the taxable income in Sri Lanka. That is the answer for this, and again this is the answer this is the answer format which I have discussed with all. I need to come to here again as the final thing, last one. This is the coverage of the answer. How non-resident person will tax in Sri Lanka? We have identified SG non-resident person, section 4 paragraph B. Identify what is the source of the assessable income. If there is a PE, you should know there is a business income. Now you need to look at, okay, there is a PE or not. Apply provisions of DTA, Sri Lanka and Germany, we have applied that. And identify how business income has generated. While analyzing, again, I need to come to here, we have done this, the inclusions, which is the PE, fixed place, the fixed place, and the exclusions. Under the exclusions, Lamai, it's a para in the article 5, subparagraph 2, in that A, B, C, D. Subparagraph 2 or 3, it's a D. Okay, then after that, provide conclusion by applying the provisions of DTA in the given scenario. Sorry, it should be subparagraph 3. Sorry. Then provide conclusion. Then what is the conclusion? There is a PE. Yes, the reasons we have explained. Clear? Then therefore, there is a PE exposure. The marks allocation 6 marks. Time, it's a 10.8 minutes. Done. This is the analysis of the first part of the question. Why I have taken this time for you? When it comes to the last part, in the Roman 3, when doing the calculation, the same thing is equally important. Okay. Now let me come to the second part of the discussion, which is in here. In the second part of the discussion, which is only for the 4 marks, which is an easy question because we have now all the relevant information with us. What is the part, the Roman 2, discuss, the action verb is discuss, whether the suggestions made by finance manager. There are suggestions, now you have to evaluate, you have to discuss, that means argument for, argument against, what is the suggestions by the finance manager would have mitigate the PE exposure. Now we know, now you can see Lamaya, Roman 1, Roman 2, even Roman 3, it's link. Then mitigate the PE exposure for expand to Germany, Sri Lanka. To mitigate the PE exposure, why we are mitigating the PE exposure? To go for the tax planning. If there is a PE exposure, we have to pay tax on the income arising in or derived from Sri Lanka through the PE on that business profit. If we have mitigate that, automatically our income tax liability, that particular non-resident person income tax liability will be reduced. How to mitigate? Is it under tax evasion manner? No. You have to go with the tax avoidance. That means the plan the tax, the mitigation of the tax or a planning of the reduction of the tax in an effective manner as per the provisions of the Inland Revenue Act, not the evasion manner. Okay. Now I need to come for the what's the suggestion by the finance manager. Okay, this is the suggestion. Very small thing. Then let me come to here, which is at a meeting held recently. At a meeting held recently, the finance manager of PL mentioned that Spando Germany should not have registered a representative office. Representative office එක register කළේ නැත්තම්. Should not have registered representative office in Sri Lanka. Instead, workplace could have been the reserves in the premises of PL for the term of the agreement, which could have been used by the employees of SG who visited Sri Lanka to undertake their function. That's the suggestion. No? He stated that this would have been a good tax planning opportunity. Now this is his suggestion, good tax planning opportunity. Since why it's been a good tax planning opportunity? Since it would have mitigated the permanent establishment exposure of the SG. Now we have determined there is PE due to being a fixed place, which is RO. Now this is talking about, can we remove this RO concept and can we go with the so-called the concept of a workplace, where that workplace should be. It is for that also the solution has given. Instead, workplace could be have reserved in the premises of PL. The premises of that resident company, which is PL, wholly owned subsidiary of PPDL. Then from this there is a premises. For the term of the agreement, there should be agreement. Now, agreement mean which kind of the agreement? Maybe the rent agreement, and which could have been used by the employees of SG who visited Sri Lanka to undertake their function. Now, maybe consultants come in for designing work, they are coming, then they can stay and do their work in the PL premises. It was very purely with the agreement, in the legal conditions, everything done. Now the question, which this suggestion, with this entire suggestion, then is it mitigate the PE exposure or not? Let me come to again, Lamai, the definition of the permanent establishment. Let me come to the definition of the permanent establishment. Under the definition of the permanent establishment, what it has mentioned, this is where in that what it has mentioned, it's very clearly given, there may be a place of management, it's a fixed place, and including place of management, branch and office, factory or workshop, these things are there. Now that workplace, what is this? The question is it a fixed place? Is it a place of management, branch and office? May PE කියන එකට මේක ඇතුළත් වෙනවද නැද්ද? Is it included to PE? If it is so, the purpose not served. If it is not included to PE, yes, the finance manager purpose will be served. Now, let me analyze. Again, in the information given in the question, Lamai, how many months they are in Sri Lanka? It's a 9 months. They are in Sri Lanka. Let me come to here. Now, I am looking for whether PE or not. I am again coming to fixed place. Now, what I am doing, fixed place, the workplace is create a PE or not. That's we need to analyze now for 4 marks. Create a workplace or not. In here, is it a fixed place? How many period they are in? It is 9 months. According to the given information, it's a 9 months. And it is a rented. Now with the agreement, it can see it's a rented property. Rented with the PL premises. Okay? Rented with the PL premises. What they are doing? Lamai, they are doing the same thing what they have done in the RO. Then the same activities. What is the same activities, Lamai? The representing the head office for this the condominium property, this development, the designing and the project management part, coordination with the independent the particular consultant, then doing the collecting of information, checking for quality control, then තැන වෙනස් වුණා කියලා කන්න වැඩේ වෙනස් වෙලාද? No. Then again there is a workplace. How? It's a workplace representing the non-resident person. And again, lamai, according to given information, it is with the agreement of the PL, they are in the space of the PL. Then lamai, automatically they are in the rented premises which belongs to PL in Sri Lanka to do the same activities what they are doing in RO, they are engaging in here. Now, is it same and similar to PE or not? There is a fixed place why they are doing the activities for the 9 months period, the same conditions. Now, you have to argue with these things, whether the going for a workplace concept, is it create a PE or is it not create a PE? In the answer, even they have the suggested to go with workplace. With the creation of the workplace, they are going with the premises belongs to PL with the agreement. It seems to be a rent agreement for this 9 months period if based on the information. Then they are doing the same activities they have done in the with the representative office on behalf of the head office. Based on all the information, lamai, there is still the exposure to PE. Still there is exposure to PE, then there is no mitigation of the PE exposure while they are going with the workplace concept. These things you should need to write your answer very properly. I have explained the answer, key answer points. Please go through. Now again, how am I take all this information? It's again, lamai, it's given in the suggestion of the finance manager. In that suggestion, I have looked into what is the arrangement between this the two resident and non-resident person. Based on that, I have came into that. Then answer, it is still there is a PE exposure. Therefore, what? Therefore, there is no mitigation to the PE exposure. Okay. Now let me come to this, which is in the question. In that, the second one discuss about the suggestions made by FM on mitigation of the PE exposure. No, it's not the valid suggestion. Now the first one, second one done with all. I need to come for the third one. Computation of income tax liability of a non-resident company including a remittent tax, lamai. For this perspective, let me come to this one to identify the income and expenses. The income, these are the income from the non-resident person, the SG, from the design-in fee income, 12% margin we need to take, coordination fee 10%, and again we have, which is the, we have in here the expenses, which is 4,000 US dollars and the 2,000 US dollars. 2,000 US dollars admin and the staff cost. Then these are the only information you can do the calculation. Now let me come to the computation. Let me come to the computation. Okay. Then okay. This is in the question in question 1. The last part, in the part A, the last part discussion. Let me come to the discussion of the question. Here, the first thing is we need to compute. Now we know there is a PE exposure. Due to PE exposure, there we need to compute the business income. In here, what are the income we have? Even lamai, for you is a reference for me to explain. Well, I have divided for all these things, but for exam you can do in a straight line, that's meaning the now without the dividing into like this in a different formats, you can take it as a straight line and you can do it. Okay, this is for your explanation purpose, I have done this. Then this is, we need to come for, this is our non-resident person, sorry, this is our non-resident person which is SG, and on Sri Lankan business operation, why? This is the source of payment or source principal, and this is computation of the business income. What are the income? Design fee income from designing fee income attributable to PE. Why, Lamai, it's attributable to PE? In the second and third bullet in the paper, it has mentioned there are direct designing fee income. There are direct design fee income and consultancy income. Can you take that? No. You need to identify this, the bullet second and third bullet. These are foreign income of SG. You should need to identify these things. Don't take those things to here. Okay? Then coordination fees on independent specialized consultants for the project management fee. It has included in the project management fee. Then what are the income it has given in the paper? Let me come to the paper again. Sorry. In here, the, okay, this is that it is given the total income which they have earned within the period, and the payment structure also given that within 30 days period, PL making the payment, and our year of assessment, the November, December, Jan, Feb, March, the 5 months is there. You need to take now the designing fee, how to take the income. In the question, it is very clearly given. These are the key points when coming to the calculation you should need to identify. It's very clearly given, this paragraph, which is the supply of information and quality control activities carried out in Sri Lanka connected with what? Design service. The invoice, total designing invoice which is provided in abroad directly, it only 88% for that component, but the rest of the 12% is coming to information and the collecting information and the quality control part. Clear? This is the first income category. Let me come to here. The first income category, which is the design fee income attributable to PE. It's the 1,800, this is all given in the US dollars. Exchange rate has given as the US dollar 1 is the LKR 200. Then it's a margin is a 12%. The 12% margin, how this has the summation of the 5 months. The design fee income, then it's a 12% US dollars, 21,600. Then on the coordination fee on independent specialized consultant, which is goes to 10%, it's again for the 5 months. That total on the given information in the question paper, in that the 10%, this is my total income. Clear? Then what are the expenses, salary cost, we have 4,000 US dollars into 5 months, and the general administrative expenses which we can deduct very clearly when computing the business income. Then it is for the 5 months, then this is that the cost is 30, income is 44,600, then your accounting profit before tax in US dollars 14,600. Clear? Now in here we need to, after that we need to come to, I have taken the conversion because entire computation after that I am doing in the LKR. Then assessable income from business in LKR, it is this is given in the question paper, the US dollar rate, it's a 2,000, then 14,600 into 200 is not 2,000, it's 200, then it's a 2,920,000. This is on the business income. This is on the business income calculation. Now, what has happened? Now, come to this one. Come to this thing. Since there is no adjustments under business income, same profit will be, the same profit will be considered as the business income. Therefore, I have converted the US dollar to LKR. We don't have disallowable, allowable or specific deductions, nothing. We don't have. Then the same thing we need to take. Done. Now we have the business income. Other than that, we don't have any income. Let me come to the taxable income. Let me come to the taxable income. Then in that taxable income, it is a computation of the, okay, here we have the business income and it is our total assessable income. We don't have qualifying payments and anything. Now we have to apply the tax on taxable income, which is a normal tax rate of the 24%. Normal tax rate of the 24%. Why? Is not industry specified, nothing, and it is we cannot apply the SME rate, no way. Then normal tax rate of the 24% we have to apply. This is the domestic tax which we have to pay under for the Department of Inland Revenue with reference to Sri Lankan business operation. Done. Now let me come to the remittance tax calculation. The remittance tax calculation, then we have the accounting profit. Keep in mind, Lamai, I am highlighting these things every time. We are not remitting the taxable income. In since our question, the business income and the taxable income is same, because we don't have the accounting profit before tax and the business income or the assessable income, taxable income, all are same, because we don't have that intermediary, the gap between assessable income to taxable income. We don't have the qualifying payments. Then and again allowable, disallowable expenses we don't have here. Therefore, the business or accounting profit before tax in here equal to business income, equal to taxable income. There may be changes like the particular adjustment it's required to do. Then please keep in mind, we are remitting the accounting profit. We are not remitting the tax profit, because we are doing the computation based on the provisions of the Act. It is for the computation of the tax liability in Sri Lanka, not to remit the profit. Then we should need to remit what we have earned here. Then it is the accounting profit. Then from that accounting profit, we first have to pay tax in Sri Lanka. After that, the remainder we have to remit to the German. Don't forget these things. Then therefore, accounting profit before tax, which is same in the business income what we have taken by taking the income minus the expenses, LKR, which is 2,920,000. In that, in our taxable income, we have computed the, at the rate of 24%, what is the tax liability is the 700,800. Then in here, we have to deduct that. Now, we are having the profit after tax, PAT, which we need to remit to the head office, which is in Germany. For this is the 2,219,200. This is that. Then for this, we need to apply the remittance tax. Lamai, how to apply the remittance tax? Don't go and apply 14% for this. Because why? This is the 2,219,200. Then this is with the tax of the 14%. මේ කෙනුත් 114ක් ගෙවලා තමයි අපි remit කරන්න ඕනේ. After paying of the 14%, we have to remit to the German. Then this is inclusion of the 114, and for this we need to apply the 14%. We need to apply the 14%, okay? Then in this thing, how we have done this remittance tax at the rate of 14%. This is in the section 62 and first schedule in the para 9. Now this is the 2,219,200 divided by, as I have explained, 114 into 14. The answer is a 272,533. Now see the gravity of this thing. Now let me take the answer after the profit after tax minus remittance tax. Take the answer 2,219,200 minus remittance tax 272,533. What is the answer, Lamai? It is 1,946,667. This we should need to remit. Apply for this directly 14%. Is it correct or not? For us to see our calculation is correct or wrong, is the answer is I am taking here 272,533. See, this one and this one is match. Understood? The same patrical way we are applying in the patris, we are paying the remittance tax. Please go through with these things. One of the good question for you all under non-resident taxation, the validity of the answer going with your effective manner of reading. Without reading these points in effective manner, you cannot come up with this answer, and you cannot write the first part as well as second part. The entire answer is going with the quality of your reading. I know all of you all can do this. One of the with the side of the students, then it is the very good answer, very good question, and it's a most of the students who know about these things, the theory part, then they can very clearly approach to the question. Okay, then with this, let me conclude the section 1 in the question 1, which is the part A discussion, which 15 marks clearly on the non-resident and international taxation, and you can see your syllabus weightage is a 15%, the marks also 15%, very clearly a very good question from your side. It's a students can score the marks. Then practice these things, practice the question, go for the mind maps, refer entire theory areas, and practice the all past papers is a key for the non-resident taxation. Go for the entire past papers, including the pilot paper. Then please do these things and go for the exam. All of y'all successfully complete the non-resident taxation and international taxation question while ensuring for yourself. I'm reading the question and analyzing the question very carefully and very thorough with the requirement of the question. Okay, now with all, let me wind up the part 1 discussion of the, which is non-resident and international taxation question 1.